All right. So let's wait for people to connect and we will start our class in a moment. All right, just gonna wait for people to connect on YouTube, guys, and we'll start our lesson in a moment. On YouTube, guys, you can always type in the right side. If you have any questions, I'll keep that window open so I can answer. Let me know if you can hear me well. How's the connection, sound, and everything? All right, sounds good. Sounds good. Just gonna wait a few more minutes for people to connect here, and we'll start. And also, it is recorded, so you can guys watch later again. How's everybody doing? Good summer. Summer is over, guys. Back to fall. It's crazy. It's crazy. I hope we won't have 2020 again. You know, the usually fall season comes. People get sick, you know, cold and stuff like that. I hope we won't have that spike in COVID again. All right, so all right, I'm also streaming on Discord, guys. If you're not on Discord, you can jump there. You can see it, but YouTube usually have better quality. So let's start. Let's talk about today trade management, entries, exits, targets. Exits, targets, kind of the same. We talk about stages, stage analysis. This is, by the way, probably the big game changer for me when I finally learn and you know understand how the price really creates and how institutions build their position. I start thinking like them, you know. And our goal as retail traders, don't think as retail traders because that's how we get smoked, right? But actually think like institutions and join institutions when they enter and you enter, and watch behavior. How can you watch behavior of institutions? Through volume and price. Those are only two pure indicators. Volume, price, everything else is lagging, right? So real quick, I use weekly. As you can see here is a weekly chart. This is daily chart and hourly chart. So when I build my levels, I primarily look at the daily chart, but often come back and revisit weekly, see if I can find some important levels from far away. On hourly, they're really good for entries, finding those local levels. So you have global levels, big ones from weekly and daily, right? Important pivot points, and local levels from like 5-minute, 15-minute chart, or like 1-hour chart. So those local levels give you an idea of a potential trend change, potential reversal happening. So, and your entries could be better using smaller time frames, right? But your stops and your idea always have to come from a bigger frame. That's how institutions do. Remember I told you, think like institutions. They always play the bigger frame. They always have an idea, right? Idea they're trying to play. So I want to break down different examples for you. I kind of put it 5 different stocks here.
My apologies.
Oops. We can start with this DVAX, but first I want to show you this playbook, and with certain rules. I have it. So it also on my in Discord I share this, and on Twitter. So as you can see, this is weekly example of the chart. The same applies to daily. The same applies to hourly. Smaller time frame, more risky it gets, right? Because the stock didn't consolidate enough, because the stock didn't build enough, because institutions didn't build enough position. The smaller time frame, risky it gets. I even apply this to 1-minute chart. It works sometimes, but again, it brings more risk, right? So as you can see, the stock falling down and then eventually find some support. SC, this is selling Climax. So when stock like falling on a big volume, and the big volume actually stops the price from falling down. Then you have automatic rally, AR. It's one of those like situations when shorts covering aggressively and deep buyers coming in, scalpers, and stock rallying real quick. And then usually it dropping back down real quick because there's no actually buyers here. And all these people just getting out of the positions, which you get after secondary stop. Usually it's a double bottom, right? And this is the first entry in stage 1. But keep in mind, stage 1 is more riskier because it's just the beginning of reversal, possibly. We don't know yet. Maybe this is just a breather before we're gonna go down, right? We don't know yet. So it brings extra risk. What else you can see here? So you kind of establishing pivot points, low, high. If you buy aggressively here on a secondary test of the prior bottom, you have to play the range. So your target minimum is middle of the range or top of the range until stock sets up and breaks higher, and then you can play for bigger targets, right? Very often stocks do false breakouts in this stage and false breakdowns. Why? Because how they can build a bigger position, how institutions can build a bigger position, because of me and you, because we put stops here, and they just break through stops and take our shares. Believe it or not, I personally believe in this. Some people saying that's not true, don't think like they hunting for your stops, but it's not like a surprise that stocks go and revisit prior areas of VPOC. What is VPOC? Where the price and volume, like I'll show you this example. Let me show you this style. 1 hour. Where's this? So VPOC is the red line. You got a value area and you got a VPOC. VPOC is a prior area when stock traded, people exchanged a lot of shares at particular price, right? So around this 1820s, they exchanged a lot of shares. And every time stock goes back, revisit the prior VPOCs from the recent areas, as you can see right here, we can look at different time frame too. So it gets some resistance. As you can see, momentum slows down right now once we come approaching this VPOC around 1950. It's not 100% like, and nothing is 100%, right? but the stuff works. Let me remove this stuff. All right, so back to our stage analysis. So right here. So then, you know, sometimes they do this false breakouts. Take retail, yeah, VPOC, VPOC, not K, C. Yes, every day VPOC is changing because, you know, the price is moving. And you also have monthly VPOCs, weekly VPOCs. I'll show you on monthly and weekly charts. This is called volume at price, right? All right, let's continue. So we got entry A, aggressive, right? You can take profits. Then entry B, what is this? Spring candle. What is spring candle? It's reversal candle. Spring candle, it's reversal candle, guys. I'll draw for you. I'll show you here. So it's a typical reversal candle like this. Spring candle, or it can be like this, right? It even can be some big body with some, like, you know, tail. Tail will be indicating potential reversal. This should be happening at the bottom of the move, right? Right here. Ideally, we want to see confirming this with a high volume. High volume will tell you that somebody just bought it here, 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 and price closed on a high in the middle or anywhere, right? So this is a potential sign of an aggressive entry, aggressive reversal on a spring candle. Often it bounces and come back and retest that area again and do an again secondary test. So this is a C entry, again aggressive, of the prior support. Also, I want you to notice important fact. So we have levels here, right here, right here. We had a false breakdown with a big volume and price coming back and testing this area. This is also a safe area. If you miss this area to buy, you can be entering on a whole entire B area right here. Why? Because price, think about this, price going back above the area, prior pivot points. That means this was a false breakout and we ready to continue go higher. So again, this is the same as right here, channeling. Your target is at least middle of the range or high of the range. What happens next? Stocks pull back and creating last point of support. What is line of point of support when stock consolidates for a certain amount of days and actually creating a range? So this is also a good entry for you to enter with risking the bottom of this last point of support range, with the first potential target at the high right here. And what you want to see, small volume at this range, right? Big volume here, it's all constructive. And then once the breakout happens right here, you want to see volume increasing towards this area. That is constructive price move. So as you can see, stock comes back and try to break. Very often people take profits there and stock try to kind of consolidate, right? This is your free entries in ABC stages. So for the stops right here, when you're entering at the bottom, it's definitely right there, right? And here, when you enter in this area, you have to give it a wider stop below the spring candle. I see often price comes back and retests the bottom of the spring. Yeah, kind of like a hammer shape, exactly. So the best, I personally found, the best entries for swing trading and day trading, for traders and swing traders, it's right here in these two stages. So once accumulation is done, It also called due diligence phase, when institutions doing their homework, trying to analyze financial statements, right? Or if it's a recent IPO, they trying to evaluate the company and they building the position. And then as you can see, SOS building. What is SOS? Sign of strength. Why it is a sign of strength? Because, I mean, how you can identify? Because of the high volume. Sign of strength, usually first indication that the stock wants to go higher. Okay, so as you can see, stock trying to break the stage one consolidation, and it enters in stage 2. This is the best area to enter on a breakout. What I do, me personally, I take a bigger position. They both contain swing approach and day approach. So one position will be played out with a stop right here. Another position will be played out with a low of the day. So the low of the day is a day trade. And that's how I do, right? I'm not saying you have to do the same way, but and then I'm exiting, taking partials. The other position stays always below the key level breakdown. Very often it's not exact level, right? It could be like a zone, as you can see, a zone. So, and stop goes right here below 9 and 20 EMA, or 10 and 20 EMA. 9 and 10 is pretty much the same. Not 10 and 20 EMA. So that's your first entry. Again, it has to be confirmed by big volume. Volume is a additional confirmation. Price clearing the level, volume confirms we in a breakout. And don't try to sell immediately, because usually if you entering right at the beginning and stocks start to work immediately your direction, most likely it's going to be a big winner. I used to do this mistake all the time. Because I used to scalp and enter like these setups, but I was never thinking about like bigger time perspective of this setup, and I would take partials and leave like huge amount of chunk, like just, you know, to see it's going higher. So now, because I'm thinking big and I have a different targets, of course my position a little bit smaller, but now I make more money by just thinking big, right? So stage 2B, it's a pullback. Usually this happens pretty quick. I'll give you some examples. And then we have a pullback. Price coming to moving averages and support those moving averages. You want to see lower volume on a pullback. Lower volume on pullback, that's a constructive, right? Lower volume, and then volume start to increase on momentum higher. Breakout again, you know, and then you continue grinding moving averages. So on this chart, I put it 30-week moving average. This is the same as 150-day moving average on daily. What I actually use, I don't use 30 anymore. I use 40-week. This is the same as 200-day moving average on daily. What else you can use here? 10-week, right? 10-week, it's the same as 50-day moving average on a daily, right? So ideally, you want to see all moving averages curling and start putting up 10-week, 40-week. Then on daily, you want to see 10, 20 EMA. I also use 50 EMA. It's the same like 50 DMA, daily moving average, but it just responds a little bit faster. And 200-day. You want all moving averages curling up and price respecting that. I'll show you different examples in a moment of respect. So now you're writing the trend. This is the beginning of the trend. So when you write the trend, you know, trend is your friend. You have different ways of taking profits. On extension, let's say stock decided to go parabolic. Well, you got to be smart. Take partials, right? Take partials. It's extended from what? Moving averages. It's extended. What else? R system, risk to reward. So if we were risking this level, and entering on a B right here, and stock decided to go parabolic like that, just think clear that it's about 4-5R. You want to lock some profits in this 4-5R, right? Where else you want to lock some profits? Let's say we have this prior pivot point right here and price approaching this. So you want to lock in the prior pivot point as well. Important key numbers, right? And then exits and targets, right? And then you write those moving averages, 10 and 20. So this is, let's say, 10. This is 20. So you put your stop, you trail them, right? Below 10. Stock breaks down, you out on some position. Then below 20, you out on some position. And then you have bigger moving average like 50 coming in, right? If it starts breaking below 50, you out on some position. Here's a caveat to this. Very often, stock breaks down like this and bounces back. Breaks down below the moving average and goes back above. So what I use 3% rule. So if stock on that day not only broke below the moving average, but actually closed, you have to wait for the end of the day, at least like until the last minute, closed 3% for the day, you take the partial. Because often it falls down 3% and then just comes back and closing 1%. And the next day you see it just continues to go higher, right? With the shakedown. And that's how you actually build a position for a swing trade and ride it for a longer time, right? And here's another area. This is more of a day trading area, but also you can be adding for a swing trade. As you can see, we had this stage 2 ramp up and building another consolidation on a high level. I used to think this way, buying high, why? I want to buy cheap and sell high, right? But this is what we call relative strength. If stock doesn't pull back, and when it does those pullbacks, they're providing support, and stock's trying to squeeze higher, it actually has a relative strength, and most likely institutions willing to buy on a high, and their evaluation saying the price should continue higher. So you enter here on the continuational breakout. Stop goes below the key level. This is a red line key level, and ideally prior consolidation below the moving averages. So these are 3 different ways how you can enter your trades, and I explained to you stops below moving averages, yeah. So now here's a question. 920 on the daily chart. Yes, 920, 1020 MA on the daily chart. Hourly, I don't use anything. I only use moving averages on weekly and daily. All right, now let's look at the examples. Before we look at the examples, here's also important fact. Oh, let me bring that chart back. So we have to be lined up with the market conditions, guys. It's very important. The market has to be on our side because 3 out of 4 stocks moving the same direction with the market, right? If market's selling, it's just not good. So that's number 1. Number 2, you have to have a quality setup. You have to have a quality setup. Number 3, you have to have an idea. It is going to be a short squeeze. It is going to be some buy the rumor idea, right? Like NVAX having potential COVID vaccine, and they're trying to build all earnings. Sometimes earnings come out and there is possible guidance, higher guidance for the next quarter, and people are trying to anticipate buy now, run it for 2 months and sell it, into the rumor that earnings going to be great. There are some ideas for you here. You can actually use it. More ideas you have for for a play, better. Then you have to have certain catalysts. It doesn't have to be news. It can be technical catalysts like we playing here, breakout, multi-day breakout, multi-week breakout, multi-month breakout, pivot point breakout, right? History of reaction is so important. How did the stock reacts on breakouts? Always look at that. And I'll show you an example on NVAX because it will give you an idea where you can put your stops, right? So in the risk to reward, lastly, these are some important questions I recommend you to think about it and try to answer them. It will help you to understand how other people position, and it will help you to think big in terms of where stop setting. If stocks going through this area, would we see a big push, small push? Would we see fear or greed? So this is kind of like a concept I'm using. Maybe a good example for you, what you can do, it's to have a scale. This is what I used to do. I'm kind of doing in my head right now. Have a scale and have 20 points per each category. 20 points here, 20 points here, 20, 20, 20, max, right? What are we getting here? 100 points total. And when you do analysis for your homework, right? Trying to identify potential setups, you're trying to give a score to each category, right? The market condition. Let's say the market condition is really bad, pretty much volatile and all-time high, and it's selling. You only give 5 points. Here for the setup is only 10 points. It's okay setup. The idea, maybe let's say it's a great idea, 20 points. The catalyst is a great catalyst. And risk to reward, like, I don't know, 15 points. Where you're getting 40, 50, 60, 70 only. 70 points, right? Then you go into another stock. Maybe another stock is going to be a higher amount of points. Ideally, I'm trying to trade only stocks that have 75 points. Often, when all of these categories, could be really high, but market conditions poor, you can't even get to 75 points, and it's gonna give you it's a sign for you. Maybe you shouldn't be trading this day and wait for the market condition to set up. It's something like exercise I recommend you to do. Anyway, guys, let's look at examples. Let's start with DVAX. Recent runner. So as you can see, it started to build this range on DVAX. We had this push and then sell off, spring candle right here, automatic rally, then pullback, test again. There's another spring candle coming in on a big volume of the prior bottom, doing a secondary test, and then slow grinder, building last point of support here, and here your volume coming in with sign of strength. How could you enter this for the breakout? You could enter here for the breakout because this last point of support wasn't that clear that we're gonna hold. You technically could take this as a potential breakout earlier right here on this candle. Breakout over this pivot point with stops below moving averages. And the big breakout was right here on this day. And then you got a pullback. To red line, it's 10. Green, it's 20 MA. This is 50 MA. You got a pullback. We're not only pulling back to moving averages here. We're also pulling back to prior important key level. You got a pullback. As you can see, volume fading, very constructive. And on this day, it's your entry to go long. Stop go below 20 MA. As you can see, stock just rally after that. Remember what I told you about? You got stage 2 breakout, stage 2 pullback. They tend to be very strong. And now we want to see this bigger consolidation for potential stage 2 continuation breakout. Yes, market conditions, here's a question. By market conditions, you're looking at SPY, you're looking at Qs, you're looking at IVM or Dow, you're looking at sectors, you're looking at market breadth, how many stocks are declining or uptrending, right? So you always can do this, like, go to FinViz, open the heat map, look at this. What do you see right now, right, for this heat map? What sector's declining? What sector's moving higher, right? Then you always can see kind of like overall picture right here. What I also use is I also use market. All ETFs kind of like right here, and I'm looking at them, right? Just a overall picture. What do I see here today? A lot of green, some ETFs going down, but I don't see like super big numbers here. What, some of them like 1%, a little bit down, some of them like 1% up, like KBE. So at the end of the day, you got to do this homework and analyze what's our market breadth. Are we in a rotation phase? Money rotating between sectors, or more of a like just leaving all sectors, right? Then answering your question again, what else I'm looking at here? I'm looking at a few other indicators like VTV, VUG, SPOV, SPHB. What are those? You can understand how where money going, right? From value to growth. This is value, this is growth. This is low volatility and high volatility. So some stocks more volatile than the other ones, right? Like Lowe's or Home Depot, then less volatile. And sometimes they move. So, and these indicators could tell you that, okay, well, maybe you should be playing low volatile stocks instead of some like high volatility NVAX, right? All right. Was it safe to buy the spring candle since the price was below 10 and 20 MAs? Well, let's look at that. DVAX, the spring candle. Right here? Talking about right here, risky. It is risky to buy here. You actually didn't get that much of a volume, as you can see here. Pretty much was a little bit higher than the average. I would be waiting here for the breakout over 10 and 20. Again, they could be really risky, the spring candles. So later you had this another spring on a higher volume. As you can see, selling Climax again after earning spring candle. Retest, doji, I would be buying better right here on this candle, and your risk reward would be better here, right? On this white candle. But sometimes it takes time. Look at this. You can be sitting here, be frustration, waiting for it to work. But if you put your stop at the right weight and have a right position size, you shouldn't be stressing and waking up in the middle of the night sweating because of too much risk and exposure. So all right, back to this example. You see B entry was phenomenal, and then stock just almost doubled. All right, so Unity Software, I traded this multiple times on both stage 2 breakout and stage 2 pullback. So again, we have selling Climax right here with big volume, automatic rally, test, reject. Here is your selling on a spring candle. This time you get the spring candle on a weekly chart. Weekly candles are better, stronger. I also want you to analyze the candles the right way. When we do this VPA analysis, right, we're looking at candles and trying to understand how people position. I think this way, we selling, kind of consolidating, maybe it's setting up for another leg down, right? We don't know. And you see this candle on a big volume, weekly candle. What does it tell you? Always ask yourself a question. Why is this like that? I mean, why you have this candle? So you get earnings, news in the back window, right, in the mirror. So you don't have to worry about the news anymore. Stock moving down. Price actually closing on this week, closing at above this prior pivot point low. That's kind of a bullish sign. This weekly candle tells you there's a lot of buying came in here. It also tells you that there's not enough selling. Bears are tired. They don't have enough power and pressure to sell anymore. Most likely, this is the first sign of reversal. Entering on this candle, breakout higher, would be a bullish setup. Would be a bullish reversal setup. As you can see, it ended up, you got to be entering somewhere here after this week is over. And as you can see, it could be really volatile. So, but once price closed right here and establishes, so you can be entering on a move higher, maybe even safer wait for this 10 EMA and 20 EMA to curl up. And then you got a couple signals coming here. Price breaking over 50 EMA, that's where we were actually talking about. I think that's where we played. Then you got this sign of strength, volume increasing. Running to prior resistance, what happens later? Price just rejects, comes back down, doing test again of this prior last point of support and building another last point of support. We played it right here on a breakout after earnings. Very often you don't gamble for the earnings, guys. That's how you get smoked. It's a 50-50 chance unless you position somewhere at 80 bucks and you're sitting here for the earnings. That's a different story, right? But here's your breakout. We took this breakout, sold all the way to this 130, the prior pivot point when price turned around right here. And what else happened after? Pullback on a lower volume. And we entered back long on this candle right here, 119, 120. They even came back and tested this kind of between 9 and 20 in a cloud. If you grind your stop, put your stop below this 20, you never get a signal for you to get out of your position. Also, pay attention that stock started to respect this 20 EMA right here. It starts to respect 10 EMA too. Sometimes it kind of breaks down, but after that immediately pops back. This is also called imbalance. What's imbalance? When there's more buyers than sellers, right? Stock selling price dropping down, but then spiking back pretty quick. There's imbalance of sides. And here's your continuation breakout a few days ago. You can continue actually playing this breakout and just ride this moving averages, play stair stepper. Institutions were selling into earnings to buy cheaper. Yes, it could be like that. Often they manipulate stocks and just selling into earnings. Sometimes they're running into earnings, right? It depends on their evaluations, right? They have like hundreds of people working for them and doing evaluation for the stocks. We don't have that, right? So we kind of have to be aware and play more of a technical side rather than fundamental. Let's look at different examples, slightly different. NVAX. I talked today with one of our traders, Gordon, about this. Different behavior. These stocks behaves different. So we also have a consolidation here. As you can see, stocks going up and down, up and down, up and down. Automatic rally, secondary test, trying to squeeze. I personally played here for the breakout. But look, stock doesn't respect the prior pivot points and pretty much just breaks down, consolidates. We have a breakout yesterday on NVAX. Yesterday, but again, look at this, what it's doing, right? So how can we adjust ourselves on stocks like this? You have an idea here, right? Idea is the COVID vaccine, right? Stock is looking actually bullish. As you can see, it's above all moving averages. It's pointing uptrend. And, you know, it's a good company. This is biotech. As you can see here, it's a healthcare biotech. This #1 sign for you to be a little bit cautious, because often biotechs could be really volatile. Really, really volatile. What is the second sign? Look at the stock, how it's moving on daily. It can move crazy. Like the next day it just pulls back down. It can run and engulf the prior days easily, no problems. Right? So you have to understand that ATR is 18 bucks. Today we already moved 23.74 based on ATR, right? Often it breaks this ATR. What else? What else? We can see the sizes of these candles. Often they're big. So you have to be aware of that. So what else? We can see that stock didn't respect 10 and 20 MA at all here, but now, past 2-3 weeks, it started to respect 20. You see this sign? So if you decided, I took a long on this day, once because price went back above this pivot point and closed above this key level, and we had this nice run for 2 days, I'm out already. It was too volatile here. But again, if you take it from here or here, your stop has to be 20 MA. Believe it or not, you have to play a wider stop here. You have to be defensive because this is volatile stock. So let me know if you have any questions about NVAX. Let's look at Dkng. Idea on Dkng, football season. You see, on every single stock we're talking about here, Unity, I didn't mention. The idea was here, phenomenal earnings, great earnings and good guidance, possible great numbers for the next quarter. That's why you see runner here. And not only that, this is software. Software been killing it, the whole entire industry been killing it. There's also a sympathy play going on here compared to Vivada software names, right? So Dkng, what do we have here? Football season starts. Here's your idea. So, and earnings in the back mirror, stocks looks bullish. Above all moving averages breaking higher. You had similar scenario. Selling Climax, automatic rally, secondary test. Look at this bullish candle. It's phenomenal bullish candle on a higher volume. Engulfs, the whole entire week engulfs. Building last point of support right here and stair-stepper high. And gives you some signals. The price goes over 50 MA on this day. Earnings coming, consolidation, attempt to break higher, pullback. This is very important. The pullback on low volume, and it's a shallow pullback. We're not like pulling back down to 44, right? So they're providing some support here. And price start to go back up above this area. You get a weekly breakout, and that's where you go long. Go long over this. Like this day, that's where you go long. Stops have to go below the prior day low and 20 MA right there. As you can see, it up working pretty quick. 2 days runner, then consolidation and continuation. That's the power of the setups, guys. Once you enter them at the right time, at the right place, they start working immediately. What else you could put here? Sometimes it's not exact like level. You can also add additional downtrend lines, uptrend lines, right? So on this day, the breakout really triggered right there around this point. It's very important to see how we actually also closing the prior days, right? The price squeezing, closing on a high, pretty bullish, and it goes on your alert. All right, so last example, ATER, we took this trade, still holding some position for a swing. So this is slightly different. Same stage analysis, but from a different frame. We don't have this kind of a stage analysis on daily and weekly. The movement just started. The volume just started to come. Ideally, what I want to see here, guys, ideally, we want to see something like this, maybe, shake down and then build up, right? Consolidation. But this is a slightly different story. We have short float. It was 25% short float. The float somewhere around 25 million. This could be very explosive. these two criteria could create explosive moves like this, right? What else is bullish here? We just broke above this day. That's initial IPO open, low, and high. So 1075, once we break the high, 1075 right here, I think we can continue to go higher. That's initial IPO high. It's a psychological number. That's where people bought, and then it's kind of like didn't work, and then eventually run higher. What is very important to understand here, we have a lot of volume coming in. And most likely all of this volume coming from institutions. There is something going on with this stock we probably didn't know. There's something, some news probably coming soon. Insiders may be buying, institutions buying. We also can look again in our favorite place, NVAX. I'll show you a little trick. ATER. What do we see so far? The short float about 23%, but this is as of Monday, right? It should be updated. The float 24%. Look at this. This is very important information. You have to pay attention. Institutional ownership 31%. Not a lot. Ideally, you want to see stocks with 70% institutional ownership. But what do you see below? Increased by 66% last week, last 2 weeks. That's a lot. 66% increase from who? Not me and you, institutions. That's a bullish sign. There's something going on we don't know. They have an interest. Maybe they did research and they're like, oh man, I want to buy this. Let's buy it in right now. Let's invest $3, $4, $5. Buy, right? What else we see here? We can look at the daily chart. I usually don't pay attention to that a lot, but let's see if we can bring, oh, sure. All right, never mind. So RSI, if you look at the RSI was low and now increasing. RSI, it's a relative strength index, tells you that there's more buying than selling, right? So we had earnings. That's how we analyze. We had earnings right here. Price dropped and eventually started curling up. You don't know if there's going to be a reversal here. We don't know exactly, right? So we have to wait for the signal. What signals we can get? Breakout, price moving higher, and volume. So on this day, we had a massive volume breakout over this day. We have a window here. Windows are levels. Often price runs through this area because there is no resistance. It wants to revisit the prior pivot point, prior resistance. So how could you buy here? You could be buying end of the day, but be mindful, your stop has to be right there. Your stop has to be below 20 MA and the prior day low. Be mindful of this when you buy stuff like that. More riskier trade would be putting your stop below this breakout. But let's see what happened after. 2 days after, they actually revisit this area and broke below and tagged some people. They definitely tagged some people. So you have to be really smart where you put your stops because they will come and take your stops. So what do we see after? Pullback on lower volume, spike again, pullback on lower volume again here. And price start to respect 10 and 20. You got a curl of moving averages, and this is a cross, moving average cross. Is another bullish. So you like a detective. You kind of start to understand by now. You have to be a detective and do those check marks. Check, 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 right? Here's we having a curl here. Price squeezing. Oops, ugly drawing. Price squeezing. And here's your breakout higher. And today it's a breakout continuation, as you can see now, testing the prior level, important level, 11 at 1075. Well, now what we want to see. So this is kind of a like cup. Now we want to see a little bit of handle. Let price come back down to 8, 9 and build up. Let shorts to come, right? Create some sort of a short setup and then squeeze shorts more and continue to go higher. So this stock has room to run. It just broke all important moving averages. What's next? The next is 200-day moving average right there. So that's possibly our target. So I want to show you something else. Oh, let me load this. I want to show you something else. All right, this is my monthly, different stock. This is my monthly VPOX and value areas, right? So this, every single block right here represent the whole entire month. Value and point of control. And this is the whole entire period for this month. So as you can see, where did we get on this today, right? We stopped exactly at the prior month point of control. That's where we had massive amount of volume and price pretty much stopped there right now. Because you're gonna have back holders here, stops, right? And just resistance. What's next? Once we break this 1075, we have an open space a little bit towards this value, 14 bucks, which also gonna line up with this value, and then we're gonna have point of control from this month, plus point of control from this month. That's your next target, around 16.50. If you're gonna break that, so 20 bucks is going to be psychological number, this pivot point right here and the value from here and point of control from there. That's how you find those potential targets. Addition to what I'm told you, you have to sell into extensions, you have to sell based on your risk to reward, and you have to write those moving averages and have a reason to sell. Always have a reason to sell. Do not trade your P&L, okay? All right. Do you guys have any questions? It's been kind of a long video, but very informative, I hope. And you learn a lot here. Where did you see short float percentage? Go to FinViz, that's where you find short float percentage. You also can find in Yahoo Finance. How can we analyze the volume intraday to enter? All right, so you can use RVO, relative volume right here, I have in here. It's pre-built. You also can use on FinViz, RVO. Yes, higher volume, it's more interest it has from institutions. Higher volume, it's more interest from players, retail, so people playing the stock, right? Stock and play. Can we go intraday? You mean like, can we trade intraday? Yes, you can enter intraday, like today. I entered today one size on this. I'll show you smaller time frame on this stock. As you can see, it had a good entry right here. Why? Let me show you in smaller time frame. Because it was building a wedge here. Stock was building a wedge. The wedge was initially like this, you know, like this, stair stepper, and I was buying into this area somewhere here because of this smaller time frame signals. What do we see here? Lower volume, bigger volume. What do you see here? Spring candle, 1 minute. Making higher lows on 1 minute chart, right? Plus, you entering into prior day levels. See the prior day levels here? Prior day pivot point right here. Right there. Pullback bounce. So that's how you can take this as a potential intraday trade and turn it into a swing trade, right? It's a fine line. It's a really fine line because often people make a mistake. They put a too big of a size and it's end up screwing them completely. And it's, you know, they putting a big size thinking of a swing trade, but actually that's too much of a risk and then it's not working. So you have to understand where you stop. Always trade with this thinking of the risk, not how much money you can make. The money will come, guys. How much you're risking is so important. And now we have a big massive consolidation on the high. You see what I'm saying here? The price is not pulling back down a lot here. It's building a massive wedge. Volume fading. Spiking on a move higher. Consolidating below the level. Everything is possible here. Maybe we can back down, revisit this area, and then come back. Or maybe we're just gonna tie it up and break higher. So, but overall here, it's super bullish. Look at the volume. Day is not over yet. It's only 10 a.m. right now, right? In my time. There's 3 more hours of trading. We almost did more than 50% from yesterday. This is super bullish. You want to look, yes, always back test, guys. Always back test. Do you know how to do back test best way? Do you know how to save time in trading? All right, it's called back testing. What you do? Open a chart, any chart, AMD. Go to daily chart and do an analysis. Back test by analyzing it. You see, I wrote everything here. I have all notes here. You can scroll back down and do back test of the prior time. Try to analyze weekly, daily back then, and then try to scroll down like this, candle by candle, and kind of paper trade in your mind, right? How would you do it? As you can see, it never give you a signal to sell until right there. It crossed the moving average. Again, going back above, never cross moving average, never signal to sell. Boom, first time closing below 3%, below 10 weekly moving average, you out. And that's how you also can calculate how long can you sit on these positions, your sell rules, your target rules by doing this type of back testing, right? Can we look at Boeing? All right, let's look at Boeing. You mean Boeing? BA? So BA in a downtrend. BA is in a downtrend. As you can see, price continues to go down. It's kind of finding a little bit of support here, but overall downtrend below all moving averages. We have a little bit of spike here. You know the problem with Boeing? Too many news. News coming here and there all the time, and it's super volatile. Weeklies, we kind of riding the channel here. See what I'm saying? Maybe it's gonna find the support here again, and will continue to go higher. There were just negative news not so long ago, like there's some companies cancel their MAX airplane, they don't want to buy anymore. So it's too many news coming here and there, and price is so volatile. But yeah, you have to also, here's the trick. You have to also trade with stocks that have direction, the same direction on all time frames. Daily, weekly, hourly, right? Daily, weekly, hourly. When direction is the same, you will get something like this. Unity software, all time frames pointing up, all time frames, or even like Dkng, right? All time frames telling you this is a buy. That's why you buy here and you buy big size, because this is an A+ setup. A+ setup. All right, guys, it's kind of a long video already. Do you have any questions? Yeah, you always can ask me questions, do your homework, do analysis, ask me questions in Discord, and I'll get back to you. All right, I hope you enjoyed. Trade safe, trade smart, and I'll see you around. Take care, guys.